This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Well, earlier this week, Netflix, the successful online film and television subscription service, said it's going to expand into 43 countries in South and Central America and the Caribbean. Well, as you can imagine, this caught the attention of our crack stock analyst team, Tracey, Ryniec, and Mike Vodicka, and they're here now to dig into this story a little deeper for us. So, Tracey, on the fundamental side, they've been really going strong, let's put it that way.
Yes.
And now I think, if I understand it correctly, that they've reached a point, Netflix has, that the longevity of this service is going to depend on how many other countries they can expand into.
Right. They need to go global for growth. They're mainly a U.S. service. About 97% of their subscribers are in the U.S. right now. Mm-hmm. They did expand to Canada last year, and that has been seen as somewhat of a success, but that evidently is the other 3%. And now they haven't reached yet a critical mass in the U.S., but eventually they will. So yes, in order to get the growth, to keep this 30-40% growth rate going, they have to go global and in other countries to get the subscriber base. They're at about 23 to 24 million subscribers right now.
Right.
Even the company themselves is projecting about 42, almost 43 million by the end of 2012. So about a year and a half from now. But that's tremendous growth. Now, whether or not they're going to get there, we'll see.
So they're going to transition here from a U.S. company primarily to a global company now.
Yes, much more so. And they're also, and they have been doing this for a while, getting away from the DVDs. A lot of people associate Netflix still with the DVD delivery to your mailbox. That has been sliding even in the U.S. now, and this expansion globally will only be on video streaming. They will not be offering DVDs in Latin America at all.
Do we know what their most recent earnings picture looked like?
They are seeing the growth there. They expect to have earnings growth of about a little over 50% for this year. I think the estimate is about $4.50 for 2011, which is like the earnings growth is there. But they're also seeing a lot of challenges with the content side of their business because, they're just the delivery service, but they have to get all these movies and TV shows, and the cost of that is now increasing. So they need this expansion in order to pay to accumulate some of the content that they're going to need.
Yeah, so foreign markets are going to be crucial for them if they want to expand their subscriber base.
Right.
They want to keep it surging. Mike, on the momentum side, the stock's been going up for a while now. On the news alone, it soared 8% on Tuesday of this week.
It did. You're right. You're right on both accounts. We did see a nice gap on the fundamental news, but backtracking to what you had initially said is, this has been a momentum high flyer for about the last year and a half. We saw shares trading at around $50 in January, February of 2010, and we just topped off at $297. So we've seen some absolutely massive gains. And the whole ride higher, there's been skepticism about, can the stock keep going? Can it keep going? And it's basically defied all critics up to this point, hitting, constant new 52-week high after 52-week high. So it's been interesting. Yeah,
every time I look on the internet, it seems there's another analyst calling for a near-term top in the stock, yet one hasn't hit yet.
No, we haven't seen it yet. The long-term trend is very strong, and then even the shorter-term picture here with shares trading in elevated territory, we did see a nice gap off of the South America story. Shares jumped from 267 and now we're pressuring 300. So this is a big-time momentum stock, no doubt about it.
And no reason to believe that momentum is going to end anytime soon.
Not from a technical perspective. You don't want to bet against the trend right now. The valuation does look a little bit rich, but this is a pure momentum play, no doubt about it.
It's interesting, though, Tracey, that earlier this year, the company itself said it would lose about $50 to $70 million in the second half of this year due to overseas operations.
Right.
So if they do, and that turns out to be true, that's primarily the cost of what it's going to take to expand into those countries?
Yeah, they're going to have to pay money to get the subscribers. But, as Mike says, this is not a cheap stock. It's about 64 times forward estimates. So that's a little elevated up there. At some point, that might catch up to them. But right now, the story is still good because they're still projecting the growth. Whether or not they get the growth will remain to be seen. Yeah.
All right. Well, we will keep an eye on this for our viewers out there. Thanks for the help on this one. With Tracey and Mike, I'm Terry Ruffalo.